Cloudification on this edition of IRM, a show on which we debate, ideate, and discuss that where India is headed, what can be done to bring India back on the growth path, and where essentially big sectors are headed. Lakshmi, fantastic to have you back. Thank you for joining us. Let's start with a big smile on your face because the data what I have is that in last 7 quarters your EBITDA margins have improved by nearly 500 bips. There is massive deleveraging and there is massive cost reduction. So the hard work and the balance sheet front, Lakshmi, has already happened. But now, this decade, next couple of years, do they belong to Tata Comm and are we likely to see a big uptick in revenue?
Yeah, hi, Nikunj. Good to be back on your program. Yes, you're right. I think one of our main goals that we laid out in our strategy is financial fitness, right? So, and that is what we've been focused on in the last year. And it's quite pleasing to see the hard work done by our teams and the results and the rewards that the market has given towards that. And we are now cranking up on the capability front, on our shifts from products to platform, and all the things that we talked about on the levers of to enable the growth of the business in the coming years. And I see a tremendous upside for our business in participating in the digital transformation, which is why we repositioned ourselves from a pure play digital infrastructure to a digital ecosystem enabler for enterprises, right? So that's the direction we are heading towards.
Lakshmi, so I'm going to pick a word from your answer, which is that you have reoriented the design of Tata Communication, and enterprise will be the biggest driver going forward. Now, if I look at broadly what we understand based on our channel checks and some brokerage reports we've referred to, you have about 4,000 to 5,000 customers, which roughly give you about $1 billion to $1.2 billion of revenue. This means your revenue per customer is still very low, even though this is a high growth area. How can you engage more? Because if you are able to engage with this customer base, there could be an exponential jump.
So let me, firstly, we need to see how can we be relevant to the enterprises. So that's a very important question. And to large enterprises in their digital journey, we hear 5 key themes that are emerging that we are focused on. One is, and that applies to both in India and the international customers that we talk to. The first is, how can through digital we enable a borderless growth, right? So people are focused on through digital, how do we enable the growth for their businesses? The second is about, how do we, build more innovation into our products and services, right? So manufacturing companies are moving towards servitization, so the shifts from products to services. So how do you build the innovation into products and services? And that is where on the borderless growth side, we talk about our network and how it enables the borderless growth for customers. On the innovation side, we have connected solutions that we have through Move and IoT and other platforms. On the third theme that we hear is about, how do we, in the digital age, how do we build agile? How can we become more agile? And there again, we are looking through our own internal automation AI efforts. How do we bring, make it easy for our customers to consume our services through portals, through APIs? Essentially, what you're seeing in the cloud world, right? So, people are able to provision new things through the portals. Similarly, on the network, and not just on the network, but entire portfolio that we have. How do we offer a single pane of glass? How do we give that digital experience to our customers and therefore build agility in how they deal with us and thereby enabling the business? So that's a third big theme that we hear. The fourth theme is about how can digital help in efficiencies and obviously cost is still an important factor for the enterprise customers. And there, we lead through simplification. Many of the large global customers deal with many vendors. In every country, they have different contracts for their voice enablement, for the network and regional contracts. And how can we simplify that through a global construct for these customers? Right? So simplification is one lever. but we have other levers to deliver the efficiencies and the savings for our customers. And the other theme that we hear is about how do we really manage risk, because the digital also, as people move to cloud, it opens up other vectors of vulnerability for cloud, internet, and so on. And there we have an end-to-end offering, right from the devices through network to cloud. How can our security offering enable the customers to manage their risk, right? So these are the 5 broad themes that we hear from customers. And against all of these themes, our portfolio of products and solutions align very nicely. So the first test for us is, can we be relevant to the enterprises in their journey, in their digital transformation? And I think we can very confidently say that we are very relevant, and we will continue to invest in products and solutions and platforms to stay relevant and be differentiated in across these 5 themes. So that is one. The second is how do we therefore serve the large enterprises? We reorganized ourselves to focus on the very top customers. Like you said, we have 4,000 plus enterprise customers, but really the top ones are giving us the bulk of the revenue, and we rightly would need to focus on those customers. And we have formed within our team what we call as a customer success teams. And we have mapped all the top customers with the customer success team. And we are also looking at other models of how we, and I think once the customer success team is successful and we know that model is good, we understand the customer context, we are able to understand their problems and deliver the solutions for them, we will expand the CST to across all of the customer bases. Meanwhile, for other customers, what we call as our prime customers, we are organizing differently through a combination of digital mediums. So we will have physical account managers in the regions for them, but largely supported through the digital desk. So we are organizing ourselves appropriately to serve these customers. And our effort will be to see how we can go deeper with these customers, participate in their journey and be relevant to them, and thereby also increase our share of wallet with these customers. And we are seeing that movement happening. But that's the direction of travel with respect to the customers, to your question.
Okay, so when these pieces will come into place and when business and revenue will start going higher and your medium-term target is about 10%, I expect that the operating leverage would kick in, which means if the same level of operating leverage and a 10% growth is assumed, within 4 to 4.5 years, our understanding is that you could be on your course to become debt-free. Is Tata Comm headed there?
Yeah, I think there are multiple. I mean, firstly, on the question of our growth, we definitely see the upside. Our shift to more digital platforms and services built on the foundation of the network, all of that we see as an upside, and there is both international and India market. The double-digit growth in the medium to long term is definitely possible. And we are going to be focused on the EBITDA. So we have set the 22 to 25% range, and we have kept it at the range for a reason, that we need to invest in the business to kickstart the growth. And with that, we believe that the range is definitely possible to achieve. And if you are able to do that, we will generate cash, and that will go towards investment as well as for the debt reduction. With respect to your question on debt leverage, are we going towards a zero debt? I think all I would say for now is, the direction of the journey is very right. We are reducing the debt, and we'll have to balance that with the investments that we need to make. And for an industry like ours, what is the right level of debt is something that we are internally debating. But I think the direction of travel and the reduction is quite good, and we will continue that journey.
But the fact that in last couple of quarters you had prioritized your deleveraging, you prioritized that you wanted to bring the leveraging level down. Will that be a priority in front of investments?
Nikunj, I think this is a range of factors. During the COVID time, obviously there was caution to preserve cash, look at how much capex we spent, and also we wanted to bring in all the disciplines within the company to have a framework on where we are spending the capital. Are we seeing the line of sight for every investment to see what returns we will get by product and by portfolio, right? So those are the disciplines that we are building within the company, so that every investment we make, we can be accountable and we can see the line of sight to deliver the ROCE that we have laid out. Right? That's been the focus. And the capex spend is lower given that COVID situation. We wanted to preserve cash, and therefore you have seen that accelerated deleveraging happening. But I can't say that we will prioritize deleveraging to as opposed to investment for the business to grow. We have to make those investments, and as I said, our business is on the foundation of the network, which calls for investments to be made. And we are making other investments towards our products and platforms to the shifts that we have to make. So all those investments have to be made to ensure that we can grow sustainably, right? And in order to capture the market opportunity. So I wouldn't say, deleveraging would be the priority as against the investment. So we will have to balance both.
I'm going to spend a minute on understanding the cash flow which you're generating, because you'll appreciate that shareholders, they look at valuing a company based on what markets are. They value the company based on future cash flows. So one part of your future cash flow will go in investment, one part will go in deleveraging, and the third part, will that start in dividends? Will you start coming out with the formal dividend policy?
That is something that we are working on, Nikunj. Definitely, we have heard this, very loud and clear from the shareholders, and we understand. So we will be, we do have a policy. We do announce, even in the years that were where we were not generating profit, there were dividends declared. But in the light of our current cash flows and the way the P&L and the balance sheets are, we would look at what our dividend policies, and we would declare those policies in the near future.
Lakshmi, I cannot help but draw a parallel, and I know it's a wrong comparison to, let's say, compare a TCS with a Tata Comm or a Tata Comm with Tata Elxsi. But the way markets look at IT companies is that they say, okay, they don't have debt, they do a buyback, and they play out a lot of dividend. How would you say that Tata Comm is different?
See, Tata Comm, ultimately, we are also, an infrastructure company, a digital infrastructure, where we have to make investments in our, the network, with the terrestrial cable network that we have, as well as the submarine cable network that we have. So, unlike IT companies, which can be entirely an asset-light model, we are on one hand, these assets we need to continue to invest, and that's the backbone of the company. And at the same time, we are pivoting towards building more digital platforms and services on top of this foundation and this backbone. So to some extent, we are quite different from the pure play IT services company that you talk about, and that's a very clear distinction.
Now, I'm going to quote from the Dipan website, which is official public document, that Tatas are showing confidence in picking up 10% stake of the residual stake of 26%, which the government is planning to put on the block soon. So what are the expectations? I mean, why do you think Tata Sons is so excited about increasing 10% stake here?
All I would say is, we have a lot of support and confidence in the strategy and the roadmap that we have charted ourselves for the company. And probably that confidence is what is reflected, but I can't really comment, Nikunj, on the quantum, and that's going to play out in not too distant future.
What the website says that 10% of the total offering has been underwritten by the Tata Group. Is that correct? I mean, is our understanding correct? I don't want to get this one wrong.
No, I haven't seen that website as to what it says, but the answer I can give you is I don't want to really comment on the quantum as the process is on, and it will play itself out in the not too distant future, Nikunj. So,
We've spoken about the main architecture, Lakshmi, of what your main business is, but yes, please, why don't you finish the point?
No, that's all I wanted to say. I just didn't want to, because the process is ongoing, I don't want to comment on behalf of a shareholder. I just wanted to reiterate the confidence and the support that we get from the group, as we got from the other stakeholder, which was the government, right? So I will want to leave the comments there, and the actions will play out in the next few days and weeks.
Okay, appreciate that. Now, the IT sector, and I'm using the large umbrella word here, IT services, product, enterprise company all put together, we've seen a lot of niche players have become very valuable in terms of market cap. If I look at India, there is a Root Mobile. If I look at global example, well, there's Fastly and there is Cloudflare. You're also incubating some businesses, and NetFoundry is one of them. Is the path of NetFoundry headed towards getting it unlocked at some point in time going forward, create a niche business which will be appreciated by the market and shareholders?
Yeah, eventually, I mean, the whole idea of setting up as a separate subsidiary is to give it a lot more agility and freedom to operate, right? So, and that operates like a software business, because we call that as an application cloud, and it's a new paradigm on the zero trust that we are working on with NetFoundry. But eventually, we would want to see that growing, and that is already growing quite well. And we believe that there will be a lot of value to be unlocked. And that is the reason why we are investing and continuing to be focused on that company. And to your other point, Nikunj, we have other platforms within the company. We talk about our Move platform, as you know, and we recently acquired our majority stakeholding in Oasis. This entire platform is also very exciting, right? So in terms of its capabilities, its uniqueness, and how it is positioned, essentially it will enable all the connected services, connected solutions for the large enterprises. We are addressing a few segments, like the airline segments, where the airline crews are now carrying with our Tata Comm eSIM embedded into their devices. Similarly, we are looking at automobile segment. We just announced and opened up a third segment with our collaboration with semiconductors, where Move will be integrated with that semiconductors, and we will jointly take that to the market to the industrial OEM. So these are all the avenues that will open up with the Move platform, and it is quite unique in the way the capabilities that it has and the capability that we are continuing to build with that platform. And if you look at that platform, not many telcos can really match it. So we are not really comparing against telco, because while telcos can offer airtime and we, in collaboration with telcos, provide the airtime, the platform itself is fairly unique, right? So in each of the portfolio, when we talked about our shift to the platform, that is what we mean. And in each one of these, there are nuggets that we are focused on and developing, and we believe that each one of them have a lot of upside to offer.
But just to understand, and I'm not getting into last quarter or this quarter, the idea of today's interaction was to understand that in next couple of years and perhaps this decade, where Tata Communication and business has headed, now that things have changed on the business front and again on the leadership front. Can I safely assume that the margins, what you've reported, and when there's a reboot in your last 3-quarter margins, that is the new normal for Tata Comm, plus minus 1%, 1.5% is a function of a lot of other factors. But in general, 20 to 24% or 22 to 25%, is that the new normal?
I think that's what we've set out as our goal, Nikunj, 22 to 25%, given all the investments that we need to make to reboot the growth and do that. That would be the range that we would like to operate in, most definitely. And to your question on, where do we see ourselves 2-3 years in the decade? Our shift towards the digital platform and services built on top of our foundation of network, offering cloud, offering security, offering the software-defined WAN, the cloud collaboration platforms where we deliver as a fully managed services. All those are all the shifts that we are making. Right? So we believe those side of the business where we are investing and focusing on would grow, and we are already seeing growth, but that's still a smaller part of our business compared to the overall network business that we have. But including network and this part, our aspiration is to grow all of that, and we would, and our aspiration of hitting a 10% data growth is not something as simply an aspiration, and we believe that the white space exists for us to grow, growth in India as well as in the international market. So that would be my view in the medium term, Nikunj.
We're living in interesting times, and thank you for joining us today. We've really covered a whole range of aspects which in a sense are important for your shareholders. Appreciate your time and certainly hope to see you in person very soon.
Thank you, Nikunj. Good to see you again.